10-13-21. NASDAQ composite. We already did that video. Now we're doing what we call the S&P 500. That we are. Let me tell you something. The S&P 500, we're going into earnings season. And we have a slight positive buy signal. Not the sell signals over here, where they went trashing down. Then it consolidated. Then we gap below the 50. And we come back down. And we test the high end of the middle right there. What was resistant became new support, as it did. And that is the trend line there. I want you to see it clearly. So when you take a look at that 100-day, and then that 50 and the 20 has crossed over and gone straight down. So what has happened as we're starting the earnings season is going to get volatile, but the technical indicators say what they are. And you have to know when you can buy. Now, October could still be very rocky and messy. So when we gap above, which we will, we'll gap above these moving averages. We're going to come up here and we're going to test that 50. And that has been that wall of resistance for quite a while here. And until we get above it, close above it, then we're not back in full bull mode. We're still in the bull mode, and we tested what we needed to test, that trend line and that buy signal. So that means that stocks that we trade in the S&P 500 and the different sectors, when they have their support levels, they too will go up with the S&P 500. Now, just beware. Keep the stops, because it's going to get ugly. And there's going to be all kinds of things. The 10-year yield knocked the financials down today. JP Morgan beat the earnings. Earnings season is here. Went down and is down 438 right now. So the financials didn't have a good day, and it's only because of the 10-year yield had pulled back a little bit. And the higher the yield, well, the less they like it. But when the yield comes down, then they get a pop in the market. And that has happened with the 10-year note. It came down to 15.26. The high on that 10-year yield was 16. So it closed out at 15.49, as it did. And then the dollar futures right now are down 0.5 point for the U.S. dollar. So back to the S&P, sell your stocks into resistance. If they gap above the moving averages and that daily buy signal starts to get stronger, then that S&P upside will be stronger and equity prices will move up higher. Now, be aware of the volatility that is coming, and it will be here really big next week, because then we really get into rapid earnings season. Everybody knows total option trading, boom, we're right there. So the caution that I have will remain until we get above the 50-day simple moving average. And I'm telling you, I've been down this road before. And we could have a big downside that could still happen. And you better keep it in your mind. And when they gap up, don't buy the high, because they will drop back to support levels where you can get entries there. Need a $100,000 funded trading account, no capital deposit, just waiting on you. All you have to do is call 702-685-0772, and you're simply on your way with a no-risk, free account that's better than anywhere. You have to put up no money. All you have to do is show us that you can trade, and that will be simple. So everyone qualifies. Doesn't matter what experience you have. Funded account is waiting on you. If you're wanting to trade, but you don't have money, you don't have $100,000, it's sitting on you. You have to put up no capital deposit to get the buying power. Once again, S&P is going to gap up above the 100. It's going to gap up above that 20 that crossed over that 50, which is still negative in the trend. And when they gap above, like this one, it gapped above and it gave it right back. And it did. You can see out of the 5-day pattern that 3 of them were, narrow range negative days. So be aware that trends work this way. You want to learn more about trends? Call us. Don't wait.